This is a silver forecast, special report, why silver is rising, and why it moves like stairs, not a straight arrow. Silver did not move higher by accident, and it did not rise because of a single headline, a single trade, or a moment of speculation. Silver is higher because 5 separate forces long in motion have finally converged. Understanding those forces explains not only why silver is here, but how it is likely to move next, because silver does not move in a straight arrow. It moves like stairs. Up, pause, consolidate, then up again. That is not weakness. That is how real bull markets are built. Point 1. The dollar and real rates finally broke. For years, silver was held down by policy optics, high nominal rates, a strong dollar narrative, and the belief that inflation was contained. That belief is now cracking. Debt levels are unmanageable, growth is fragile, and real rates are no longer doing the work. Silver does not wait for rate cuts. It moves when the market realizes they are inevitable. That moment has arrived. Point 2. Physical supply tightness is now visible. For a long time, silver tightness was discussed quietly. Now it is visible. Inventories are not rebuilding. Wholesale supply remains tight, and physical premiums are not collapsing, even as price rises. That tells you something important. The price is chasing metal. Metal is not chasing the price. That is not speculation. That is repricing. Point 3. Industrial demand is no longer optional. Silver is no longer just a monetary metal. It is a strategic one. Solar expansion, grid rebuilds, defense systems, data centers, electrification. This demand does not pause because price rises, and silver cannot be easily substituted. That creates pressure underneath the market, not a ceiling above it. Point 4. Investor psychology has flipped. Bull markets are not driven by optimism. They are driven by disbelief turning into urgency. For years, silver was ignored, then mocked, then written off as dead money. That psychology has changed. Institutions are underexposed. Retail is no longer selling rallies. Pullbacks are being bought. That is how vertical moves begin. Point 5. Gold LE. Silver is now catching up. Gold always moves first. Silver follows later. But when silver follows, it overcorrects. Historically, silver lags, compresses, then releases violently. That is what you are seeing now. Not randomness, compression being released. Why silver moves like stairs, not an arrow. This is where most people get confused. They expect silver to rise smoothly. It never does. Each surge forces the market to ask whether the move is real. Those pauses are where weak hands exit. Physical buyers step in. Institutions reposition. And supply is absorbed. Those pauses are not tops. They are landings. The road ahead. A healthy bull market builds levels. First, digestion near prior resistance. Then continuation. Silver is building those stairs now. Not straight up, but step by step. Bottom line, silver is not rising because of hype. It is rising because monetary confidence is cracking. Physical supply is tight. Industrial demand is locked in. Investors were underpositioned, and gold already showed the way. And it will not move in a straight line. It will climb step by step. Stairs, not arrows. And if you want to track this move as it develops, step by step, not headline by headline, look for our full silver forecast, released every Saturday. That's where we break down the dollar, gold, physical supply, and the next levels silver has to clear. So you're not reacting to price, you're understanding it. This has been a Silver Forecast Special Report.